been a sort of slow start to the year.
Why do you think that it's been a slower start? Is it just price related? Is it macro, like Fed policy, interest rate stuff?
Yeah, I think that's right. I mean, you know as well as I do, if you're looking at it, it's kind of been directionless most of the year. Okay, we got sold off a bit. Everyone's worried about the macro side, inflation. Of course, you've got the war in Ukraine. So, and Bitcoin particularly at the moment, I mean, look, the whole asset class is driven by Bitcoin. We like to think that it's going to be a store of value asset. We like to think it's going to be, you know, digital gold. Everyone talks about it. But actually, it's a risk on-off asset class, so like stocks. If you chart the S&P or the NASDAQ versus, say, Bitcoin, you're just seeing the same price action, just a bit of a lag. So that's meant it's been directionless. I think now, Do Kwon buying a whole bunch of Bitcoin has helped. But look, from the start of the year to now, we're basically unch, right? Mm-hmm. So it's whatever it is now, 46,000. It's basically unchanged in the year. We're still waiting for that influx of real institutional money because that's going to make it pop.
If Do Kwon from Terra, with only $3 billion, I say only, but in the institutional world, it's not really that much money. If he can have the impact that he's had over the last, 5 weeks or whatever it's been.
Yeah.
When institutions show up with real size, does Bitcoin go to $1 million a coin?
You're going to be happy. I'm not even sure you're going to be doing this podcast anymore. That's all I know. You're like, David, it's been nice knowing you, but I'm on a beach.
What do you think happens though? Like,
it's going to explode, Anthony. I mean, look, so here's I've said it again, I think, before on your show. There are $200 trillion of assets in custody today. That's a fact. The three biggest custodians in the world are the three biggest custodian banks are, State Street, Bank of New York Mellon, JP Morgan. They control $100 trillion. There are 500 institutions in the world that matter. Total market cap of crypto today, $2 trillion. 1% of those assets in custody. I know all these names are looking to enter the market. I know all their customers and their investors want access to crypto. So if just 5% of those assets in custody go into crypto, it's very simple. The market cap of the asset class has to be $10 trillion. That's 5x where we are today. So what happens to the price? As I say, and you get the keys and lock the door here.
I mean, I completely agree, obviously. What I think is fascinating, I was talking to a pretty large hedge fund manager recently, and his perspective on crypto was like, I'm not anti-crypto. Mm-hmm. I just know what I'm good at and where I have an advantage, and that's in equities. And so I'm going to stick to investing in equities. But it's interesting to me. Help me understand. And he knew that there was 21 million Bitcoin. He understood the idea of supply demand, obviously. When I started to explain the on-chain metrics and the ability to see the illiquidity in the market, he kind of, he perked up a little bit, right? And he started to say, so you basically have like the structural liquidity, but then you have like the actual market liquidity, and you can start to basically analyze which people have what historical holding versus selling patterns, how much illiquidity, how long, when did they buy, what was the and I was like, it's all right there on the blockchain.
Yeah.
And you could just see him being like, I'm still an equity guy.
Yeah.
But like there's more information available here that could better inform various decisions. And so when I take that as kind of an anecdotal point from a conversation, in your guys' metrics, you break out the average trade size by instrument. And the chart that I'm looking at has Bitcoin USD versus ETH USD. Bitcoin USD, pretty much since the beginning of last year, has had a much more significant average trade size. So that strips away how many institutions, that strips away how much volume. It's just looking at when somebody trades, what's the average size. Why is Bitcoin so much larger? Is it because the market's larger and people feel like there's more liquidity, or is there something else going on there?
100%. I mean, that's where the liquidity is. I mean, if you meet a bunch of people asking you, hey, what should I buy? And you'll know a lot more coins and a lot more assets than I will. But I'm like, look, if you're dipping your toe in the water, go Bitcoin. It's the most liquid asset class. So someone comes to us and they want to buy $10 worth of Bitcoin, $10 million worth. That's relatively easy to do. You try and hit that in one clip in Ether, and you're going to move the market, and you're going to get slipped 180, 200 basis points. You've got to slice and dice it. You got to do it in smaller sizes. It's just that all the biggest market makers are trading Bitcoin first. And again, let's look at it. It's 40 to 50% of the value of the total asset class. So when they first come, they're making Bitcoin. I think Ethereum's doing better. Solana's also doing better, but it's very thin. And when you talk about that institutional money coming in, you just see huge price gaps, which isn't good for the asset class. And it's partly what we have to try and do at LMAX Group and LMAX Digital, is bring bigger, better institutional market makers to get deeper liquidity across the asset. I have a customer, last week, literally bidding me up. David, look at this slippage. All I did was buy 20 million Ether. I'm like, dude, this is huge. You're just the biggest in the market today in that asset class. You need to cut that up. You need to trade that in shapes of about $50,000 if you're lucky to get it done. You can't do it in one click. He trades a bunch of foreign exchange with me. His biggest day in FX with me was $3 billion. And he trades in clips of 20, 30, 50 million. And they expect to be able to do the same in crypto. You just can't today.
So let's use this hypothetical person or real person, but don't say their name. If they trade $3 billion in a day and they're doing it, let's just call it 50 million at a pop. Are they trading to capture 1-2% moves intraday, and they're like literally day trading? Is it a human driving that? Is this all kind of high frequency stuff? Like, walk me through what they would do in the FX world. If you trade 3 billion in a day and you're trading that size, what is the goal or the trading strategy?
Well, it depends who they are, right? So I kind of have 3 distinct sets of clients. You've got banks who are basically facilitating trades for their customers. Their customers might be asset managers, portfolio managers. They need to buy 100 million euros, 200 million euros, 1 billion euros to facilitate rebalancing their portfolio. You've then got brokers, a lot of brokers servicing retail, and they're just back-to-backing that flow. And then you've got the proprietary trading firms. They don't like the terminology HFT, high-frequency traders, but they're just looking to gain some alpha and get in and out. They're trying to make markets everywhere, and they're trying to nick half the spread. But the one thing that underlies all of that, if that's too detailed, too complex for everyone, is the smartest guys are all using algos to execute the trades now. So even, who's the most famous investor in Bitcoin? I guess it's Michael Saylor. He's using an algo to work that order. He's got a target price. He's using a VWAP. And by the way, you can buy these on eBay, right? You can buy these models if you want to. You just plug them in, and you're just trying to have a target price, right, to let you access that. So that's really what they're all doing. No one's pointing and clicking. So I'd say today, 90% of all our FX volume are done through API and done through algorithmic trading.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you subscribe, like the video, and see you next time.